Good everyone. In this video, we'll be talking about market structures and identification of change of characters and break of structures. So now, let's assume you as a trader, you see some movement in the market and you kind of get confused. A lot of people does not even know where the areas to place a trade when the market breaks a structure or when a market is fake out on a structure or coming as to retrace on a structure. So now let's say there is some movement that you need to pay attention on, and it will help you a lot to mark out a perfect entry zones for your trades. So now let's assume the market is moving and you will have maybe a very massive pump in the market or a momentum, an impulse movement in the market. Then after the impulse movement, the market now kind of started ranging. Now there is something, some of you just hear break of structure, break of structure. That structure is just talking about a formation that the market has been respecting for a period of time. You understand? So it has been respecting that structure, then suddenly something happened. Now let me give you the instance. So the instance is the building you're staying in. Let's just assume that a motor fell a break and hit your fence or your building, and the building or the wall, a wall just crack or fall down. Now the term used in that place is that the accident that happened have caused the deformation of this building structure. Yes, there is a deformation there. So that means the break on the wall is a break of structure. It has broken the structure of the building. You understand? So now the chart also is building the structure and suddenly something happened. So in this kind of movement now, there is two ways. This is a wedge, some people call it a wedge. So if you look at this place, there is work of trend line. You can now use your trend line to trace out the movements, how the market made the move. So you put your trend line on the market, mark it out, mark the movement of the market. And for those of you that didn't get it confused, it is not must that the trend line mark out or touch the whole hit on the market line. Now let me show you instance. Like we had a hit here and we had a hit here. The most important thing is that however you are drawing the trend, the last hit to the close to the market price, the last hit to the market price, your trend must touch it. Now let's assume that the market price is here. The last hit is this place and this place. So any trend you are drawing, whatever you are drawing, it should touch this level and this level. So even if we had this level going up this way, then your structure have reformed. You have to take it up this way. That is what it is telling you. Then if this one now extends to this level, then you don't have choice. You have to trace the structure that extends to this level, and that is what will make you to now retrace it this way. That is how it is. So let's go back to what we're talking about. So let's assume this is a structure we're talking about, and the market made this movement. Excuse me. So markets made this movement and the market has been ranging. Now the market is coming down this way. So what you as a trader you're looking for is that you're waiting for a breakout. But mind you, it is not all breakout that is actually telling you the direction of a market. So now, if this market decide this one now is a fake out, this is a fake out on the market. And in our next video, I will tell you how to spot a fake out. You understand? Let's firstly concentrate on break of structures and change of characters. So now on this structure now, you can now see that the market is actually respecting a trend, and that is why they call this thing trend line. You understand? The trend line is used to identify the trend of the market. It is different from the horizontal lines that you are using to mark out your support and resistance. You understand? These ones are the horizontal lines used to mark out your support and resistance. But this trend line is also a slopey support and resistance. It's just like you climbing a hill. You understand? The step you are climbing, it is sloping. It is also a supporting you from going below. You understand? Just the same way the normal level ground is supporting you from going below. You understand? So now, in this market now, the market can decide to make a move breaking up successfully, closing above the market. Now, when you make this move successfully, you can now come back now and say, oh, this market has successfully broken this structure, or it has successfully broken this resistance level. You understand? So you see the two things I marked out. It has successfully broken out of this structure that is forming. But remember, there is a resistance zone here. The market also successfully broke above the resistance zone. You understand? So when you broke the resistance zone, there's two things coming into your head. Is a retracement, the market you trading, waiting for the market retracement to come in, or waiting for the market to respect the retracement? So now, what are you now saying? Whenever you see a break of structure, every trader knows that when you break a structure, when you see a break of structure, you are waiting for a retracement of the market for you to go in that, continue going in the direction of the market. So the break of structure this way, the market break above it means a continuation of a trend. So remember, the trend has been coming from down. After a range, you now break above going up. But mind you, as a trader, you don't just put 100% sure on that structure, because there is something we call a change of character. Now, this is a character that the market has formed, and you break above, and you wanted to continue respecting the movements. You understand? For a continuation. So you will now see a lot of people taking an order around this zone. Yes, it is not bad. Mind you, if you take order around this zone, in fact, in a normal sense, or using your demand and supply, this order block, breaker block, and this demand zone that the market left. So you will mark the two of them out. You mark it out. From this zone, let me put it. From this particular zone to this zone is a zone for a buy. So that means if you put an entry here, you are expected to place your stop loss below this zone. That is at least going this way. But if you put your entry at this zone, the advantage there is that there is a high possibility, like you are very close to your stop loss. So that means you can at least give a go ahead again, extend your stop loss, so that even if the market decides to trace to this support zone, you will still be in the market. That is the thing there. Then another person can decide to mark out the 50% of the zone. So marking out from this level to this level, taking out 50%, which is this level, and using that level as his own entry for a buy. Remember, because we have seen a break above, the break above we have seen is a confirmation that, oh, we are going on a continuous trend. That means the market will continue moving the upside. You understand? So another person will place an entry here, and his stop loss will still be below this zone. That is expected. But what's happening is that you see a lot of people, when they place their entry here, they will still place their stop loss to be here, knowing fully well that from this zone to this zone is a support zone. The markets are broken above it. Now let me tell you why it is a support zone. When the market was ranging this range, it shows that this is a resistance, this is a support. There is actually an unseen force acting on this zone. That means sellers are selling the market from here, entering money here. Buyers were putting money, buying the market from here. So suddenly the buyers overtook the market and broke above. Then breaking above, that seller's order block where they were selling has already turned to a place where people will buy from. Then remember that buyers were also waiting for market here. So that means this market can still dump to this zone to clear all the sellers, all the buyers that took CMP, took the entry around this zone, to kick them out and pick entry here and continue the movement. That is the thing that might happen. So you as a trader, what you should do is that when you're taking this position, at least do your proper calculation. Okay, if this market fail to respect this zone, is my stop loss covering this zone, or is it covering this zone? That's first thing. So in this time movements now, we are expected to see a move from here to this place going high, or a move from there to here going high, or a move from here to here. Or at times you see a move this way. You might see a move this way, showing a retracement, then a pullback and continuation. This is a possible movement. Then this movement here is what we call a bullish flag. The market is now forming a flag to retrace all those zones. Before a movement. This is it. Now, what have we done in this chart? We have marked out this is a wedge where the market formed a wedge for a continuation, and this is a bullish flag. A bullish flag is a pattern that confirms a continuation in a market. A bullish flag is a continuation pattern. You understand? That is what it means. So, apart from this thing forming now, there is also a possible thing that can happen. Remember that this break of structure that we saw here, instigates that the market is going on a continuation. So we call it a break of structure. So now imagine this market now decide, maybe there is something that happened in the market and it decides to manipulate and now come back and break below. After breaking below, what do we expect? It has also broken a structure. So by then now you will not see traders or a professional traders going back to their charts to rephrase this chart. Okay, this trend line actually moved this way. That means they will be looking for area to sell at this zone. Now, in this part now, you will see them not calling it a break of structure. Yes, it is a break of structure because this is a structure that the market broke. Now, this is a structure that the market successfully broke. It successfully broke this structure. POS successfully broke this structure. Yes, we know that it broke this structure, but we are not going to call it a structure. Why? We'll call it a change of character. Why are we calling it changing the name? It is the same thing. But what's now happened? This market successfully broke above. That is a break of structure. That means the character of the market is that whenever it breaks a structure, we expect a retracement and a continuation. So that means we expected a retracement, then a continuation. But instead, the market violated all the rules and came back and break below. You understand? Now, let's assume you are with your wife or you are with your husband. Then your wife is someone that whenever she wakes up in the morning, she goes to the kitchen, wash the plates, make breakfast for you, so that before you even wake up, the breakfast has already been served. You understand? So suddenly your wife now change. Now, when you want to talk to your wife about the change, her change of behavior, you will just be like, "Oh, sweetheart, what caused this change of character? Your attitude, your character has changed." So what he's telling you, coming back to this market, the character they are talking about is that normally this market is supposed to, after breaking above, retrace to this place to respect the normal character of the market. But instead, the market violated the character, changing the character. That means changing from uptrend to downtrend now. So what people are now looking for is for a retracement either to this zone will now be an entry zone, or this zone. Then when they take this zone as the entry zone, they will not start selling it from that place. That means they will shift from buying market to a selling position. So this one now will not be called a break of structure, but a change of character. SHOCH. Sorry, CHOCH. You understand? So change of character or a market shift. So in this kind of position now, you see them placing an entry. They will place an entry around this zone, and their stop loss will be above this level. You understand? So that is the pattern that the market forms at times. So there is another pattern that the market forms, which is another structure that market forms whenever you want to make a movement. And that structure now is, what if the market decide to make a movement this way? a market having a momentum, remember this thing I'm explaining is also applicable if it happens inversely. Don't worry, after analyzing all this now, we invert the charts for you to see that it's the same thing. You understand? So markets making a move, then you now see this market ranging downward. Now the market's ranging downward, it is a structure that the markets have formed, even though it's a downtrend. And that is what made me to always tell my students that every downtrend you see in a market or uptrend you see in a market, if you go to a higher time frame, it is a flag, either a bullish flag or a bearish flag. So whenever you see this movement in the market, I want you to look closer to the market, go closer to it, then you will see that around this level, when the market was about, this is the post for the flag. This is the flag post. So this momentum, there is always a red candle that acts after maybe the market made a move this way, pullback. It had a pullback like this, then this place we had a massive reactions before the continuation. So in this kind of movement now, you will the first thing you need to do is at least mark out another block at this zone. If you mark it out, then you come to this zone. Remember this level now. If you go to a higher time frame that is higher than maybe you saw this pattern, this reaction here and here, you saw it on 15 minutes time frame, then I suggest you go to 45 minutes time frame. If you go to 45 minutes time frame, this reaction will just be a single candle. You will now see in between two bullish candles that made this movement, you will see a red candle in between them. Then you mark it out. Then when you mark it out, this is your first support zone. You understand? So this area where you will be placing your entry for a buy. This is the two areas where you will be expecting the market to retrace from. Then your stop loss will be below the wick of the movement. Then this is, if anything violates this rule, the second entry will now be around this zone. Will be around this zone, so the resistance level that you expected. Then the first take profit, I always tell you, should be around this zone, marking out second to the last high. So this is the last hit the market made before this retracement. The second to hit after the hit, this is. Now to analyze this thing, because some of you does not analyze what it means, is this market has actually been breaking a structure. This is a structure, break of structure. Every downtrend is breaking a structure. Why? What made it a downtrend? The reason it is a downtrend is this: the market is breaking the down part of the structures without breaking the up part of the structure. That means it is moving downward. You understand? So the same thing applicable to uptrend. The market is breaking the up part of the structure, which is this kind of movement. The market is making this movement this way. This is an uptrend. It is an uptrend because this market is respecting the down part of the hit and breaking above every high that the market has made, and that's why they call it higher high, higher low, higher high, higher low. It is making a higher high, but the lows is making a high of the lows. So this is the low, this is the high, this is higher than this low. You understand? Even though it is a low to this high, you understand? So this is higher than this low, but it's a low to this high. But this thing is a higher to this low, but this one is higher than it. You understand? That is why they call it an uptrend. You understand? So don't be confused anytime you approach this movement. So in this kind of movement now, what are you expecting as a break of structure? You are expecting for this market to make a hit after breaking this structure, kicking this level, because we have another block or a demand zone here. You should at least, when you are taking this position and the market decides to hit this level and reverse, run out of the market. Because why? You expected to see a break above from this level. The market breaking above the trend, at least you should not respect this trend. You should see a perfect break above the trend, then the market retracing on the trend, or sometimes it can come back and retrace to the entry before continuation. You understand? These are the levels that the market move. This is another pattern the market maintain. You understand? So now, going ahead now, there is sometimes when the market is making a range, or yes, it's making a range. You see a range this way, and I always tell you, it's from a chart movement. When the market is moving, all this head and shoulder you're seeing double bottom, triple top, triple bottom, inverted head and shoulder. All these things came out from a range of a market. You understand? Now, let me tell you how to approve this movement now. Now, for those of you coming back to this zone now, for those of you that get confused, okay, you might be, as you are watching this video, you might be asking, okay, actually, how can I go ahead to identify the perfect place to take my order? Now, I cannot tell you that. If you look at these markets now, there is something we call disintegration of a trend, or disintegration of a chart, or division of a chart, or division of a pattern. I don't know, whatever you call it, that is what it is. What do I mean? You can now come back here and kind of mark out this zone, divide the chart into two. If you mark this zone out, extracting this level out, you will now get this thing now, this pattern here now, will now give you something like this. It will now give you something like this. See the market go up, it came down, now make a high, now come down, break low, now come back again, now go down. Now, in normal sense, using a chart pattern, this is a head and shoulder. And what is the pattern of head and shoulder? Head and shoulder signifies a reversal pattern. A head and shoulder is a reversal pattern. So in this structure now, some of you think that head and shoulder only is this way, that it must make an equal pattern this way. No, it's not all the time. If you make it this way, remember this is our neck. Why do we call it our neck? It's also our a structure that the market has maintained. So this movement here, the market has broken a structure. Then this level here is the shoulder. Then after the shoulder, then this one here, this one you are seeing here is the that is the head. This is the head, and these ones here are the shoulders. So this level here are the shoulders, then this one here is the wick of the market. You understand? So that is it. So going to explain it now, if you're trading, if you see the structure in the market and you did not enter, maybe you're scared of entering at this zone at first because you don't know if the market will still hold the particular zones for you to enter. Then when after breaking this structure, this market, remember it has successfully broken a structure, which means after this one change of character, this level here will now be a perfect break of structure for a continuous downtrend. That means the markets have reversed from pulling up to continuous movement to reversal. So when you see this movement, definitely we see a retracement after the break of structure, and the retracement will pass this level, coming back to your trend line to retrace from. This is a perfect way to take it. Then by then now, you have already succinctly made your risk to be low. Why? Because if you place this order here, your stop loss should be above here. Remember the principle of demand and supply, or support and resistance. When a market breaks a support or leave a demand zone, the previous demand, your stop loss should be below the previous demand zone. So now, this was a supply zone that the market created. So this is a demand zone. You understand? Then this is a supply zone. When the markets made this hit and goes up here, it left this demand zone for the market to try to retrace to this zone and continue the movement, which will make it a double bottom. But the market, instead of making the double bottom, the market decided to break below. Breaking below means it has violated this demand zone, then it's left another one here. But we have a supply zone that the market left here. In this supply zone, when the market made this hit before, we had a zone that the market broke this zone and it did not respect it. Because of this movement here, the market, the market did not now come back. Instead of just violating this rule, just expecting this market to come to the market can come to as high as that, but for you not to miss out in the market, this is the level. This change of character is what you just need to mark out. Your change of character being your entry, your stop loss being above here. The reason your stop loss is above this high is because this market can go as high as this level to retrace this level before going down. That is making a double top. You understand? So now, if you start all these things out, you have your head and shoulder, Then your head and shoulder, what will happen? The market will now come back, retrace the shoulder line. Now, for those of you that get confused whenever you are dealing with head and shoulder, know that your entry zone for head and shoulder is from the neck to the shoulder. This zone, this whole zone, is a zone for entry. For you, the market can reverse from any zone here, and that's what they say. Whenever you are trading a head and shoulder, your stop loss should be above the head. This is the head. Your stop loss is supposed to be above the head of this shoulder. The head of above the head of this structure. So now, if you are taking this structure now, what I always teach my students to use as a means of identifying the appropriate movement is because you are trading with little amount of money. Instead of you taking this level for you to risk all this movement, if the market mistakenly hits your stop loss, you are losing huge amounts of money. I always say that 80% of the time, this market always comes back to the shoulder. Yes. So this pullback now, the market, maybe you enter this market before forming it, maybe the market was here coming up, just mark at the left shoulder and wait for it there. The market will release a wick, pick the shoulder and dump. And sometimes it will not pick it. Now, how do you know when the market might not come to the shoulder to pick? If this neck now make a shift below, then by then you now know that the neck is not a horizontal line. The neck is now a sloping line. This is now the neck. So whenever this market make this movement, this left side should be your entry zone. Most of the time, should be your entry zone. Then you see this market retracing to this zone and dumping. Then your stop loss will now be above the left shoulder, which is here. You understand? Or sometimes, most of the time, there's some little things. Maybe you look at the market and you see within this, from this level to this level, you see a dodgy candle. Now this is a red candle that's supposed to come down. Then you see a dodgy candle, but it is green. Now remember, dodgy candle does not respect any color. It can be red, it can be green. But always look for that candle, that precious candle that is in between two red candles. If you see it here, you mark it out. Then take your entry there, your stop loss above this zone. That is actually how we trade all these patterns. For the continuation, watch out the next video so that you can see the continuation of the structure we are talking about. Thank you so much for watching so far. In our next video, you will see more of what the markets will have for us, so that you understand perfectly how head and shoulder works, how double bottom works, how triple top works, how break of structure works, and how change of character makes play in the market. Thank you so much for watching. Subscribe, like, and share it with your friends. Thank you so much, guys.